Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Triple Q report for Wednesday, January 26th, 2022. Before we jump into the charts, as usual, just want to encourage you to please click like each and every time you watch the daily Triple Q report. It does help us out a great deal with whether or not we're found or not through searching on YouTube for Triple Q analysis, Nasdaq-100 analysis, so forth and so on. And subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded to the Wicked Stocks channel on YouTube. And that includes the daily Triple Q report. And so knowing when this is released, seeing it early before the opening bell for sure will provide it relevance for your trading and analysis. So let's take a look at the charts. I just want to remind you from a week ago today, Wednesday, we did have a significant sell signal in the Triple Q when we settled below the formation, the longer-term channel bottom that is presently at 372.88 today, still anticipating 323.77. Now that was considered a 3 to 5 week signal, and in just about 3 to 5 days, we're 80, 90% of the way there. I don't have the exact number in front of me, but we are close. And in fact, on Tuesday, we put out a new low settlement following this signal. And so we may get down to 323.77 pretty quickly. So with regard to the session containment parameters for today, for Wednesday, downside, I've got 334.15, which is nothing more than the move low from Monday. And we may actually reach that today. I'll get into that in just a moment. And then upside today, 356.61 is our session containment to the upside. So in terms of what can contain daily highs and daily lows, daily highs 356.61, daily lows 334.15. And, this is the 356.61 when you zoom in. I'll get to that in just a moment. Let's look at the support and resistance for today. I've got lots of minor points scattered about. I want to remind you that this market is heavy. And in fact, I even suggest that you're careful if we're given the chance to buy Monday's 334.15 low. I just want you to exercise caution because I think breaking it could actually yield the 324.11 target on an intraday basis. But let's take a look at the intraday containment levels just below the market at 338.19 and above at 351.24, giving the market plenty of room to breathe here. And if we break 38.19, we should test Monday's low at 334.15, where we could actually place a daily low. There are lots of incidences on the daily charts where you've got two consecutive highs or lows within a day or two apart of each other. So that happens quite a bit. But given the sell signal, given the heaviness of this market and the uncertainties that are sort of plaguing it, I think psychologically, if we break 334.15 today, we could actually test 324.11 today. And you can see that clearly with the kind of volatility we still have. 324.11 would be a met objective. And that formation, as I've been saying, is long-term support that can contain selling through the year. And I mentioned in yesterday's Triple Q that if we do close below 324.11, I think the next stop, not technically with regard to the Triple Q, but in terms of the next action will be observing the SPY. And obviously if we test 324.11 today, the SPY will also be much lower and will probably have taken out its low that was placed also on Monday. I guess what I'm saying here is, and I'll just give you some data, we're about 3% away from testing the 324.11 channel bottom in the Triple Q, while the SPY is a full 8% away. So what could play out is we close below 324.11 in the Triple Q, and then several days later, the SPY tests its long-term support in the mid to upper 390s. And then we'll just see. I think, with the intermarket analysis, the SPY could quite easily bottom out there for the year itself and then rally up from there. And then the Triple Q, I think, would obviously follow suit. So, there's also another scenario where the Triple Q plays as an annual low at 324.11. The SPY fails to reach its objective in the mid to upper 390s, and then both trade upward in tandem as we continue into later Q1. Obviously, a lot of speculating here. I'm just kind of painting the broad brushstroke. Let's take a look at the upside today. if we push through 351.24, and remember, both 351.24 and 338.19 can firmly contain intraday trade, and if we violate either one, I'm expecting the next notable point, the next emboldened point. So below 38.19, expecting 34.15, and above 51.24, expecting 56.61, which is a descending one-third speed line that is based on Monday's low against the all-time high in November. It's dropping every day, and as long as Monday's low remains intact, remains good, remains untested, that speed line will be there as a kind of a near-term trend-defining element, able to contain daily buying pressures. From there, we could fall back to new lows within a matter of days. But closing above 356.61 today, and it is possible. And if we do, then I'm expecting the 372.86 channel bottom where the sell-off began last week. And that should take anywhere from 1 to 3 days. That would still be late this week where we could top out, yes, through February trade, and still below which, anticipating that 324.11 formation over the next 3 to 5 weeks. So if we test 372.86, let's say over the next few days, and once again, it's not indicated unless we close above 356.11, 356.61, that 372.86 formation able to then contain buying through February, and once tested, we can fall back to 324.11 within 3 to 5 weeks. Now, I must also mention, and it's a bit of a moot point right now because I don't see us testing it today, but I'm just giving you the heads up that 372.86 is the start, really, of a narrowing range of meaningful resistance up to 382.62. Those two converge next week, and they do sort of represent not only our ceiling through February, where the market can grow overbought and fall off into the 320s over the following 3 to 5 weeks, but also our upward pivot point through February. So if we were to close above that 382.62 speed line in the next week or two, that for me would indicate not only a good low through February, but probably a good low through the balance of Q1. And I would then anticipate the 410s or 420s. I don't have it mapped out yet over the following 3 to 5 weeks or so. I'm going to leave you with the support and resistance for today. All of the levels have been painstakingly chosen. That doesn't mean that they're destined to hold at all. It's just that they are relevant. They're real, based either on short-term Fibonacci retracement, highs, lows, so forth and so on. And I think I've said just about everything. Please click like if you like the Daily Triple Q report and subscribe to the Wicked Stocks YouTube channel. And I will be back tomorrow for Thursday's Daily Triple Q report. You have a great day.